All right. Next up, my friends, we have a really cool chat. I'm going to go ahead and bring them out. This is an exclusive interview, so please join me in welcoming Len Tannenbaum, founder and CEO of Advanced Flower Capital. That's AFC Gamma. Hello, hello. And good to see you. And Will Yakowicz from Forbes. Guys, take a seat and enjoy yourselves.
All right, let's see. Hey guys, how's everybody doing today? And Len, nice to see you.
Oh, good to see you too.
Yeah. So, to start, I just wanted to see if you could tell us a little bit about AFC.
Sure. Advanced Flower Capital is currently the leading lender in the country to cannabis operators. And we do that through our public entity, AFCG. We do that through some private entities as well. And we're even involved on the equity side. So we're really excited to be such a great part of a fast-growing industry and provide capital help for construction lending and growth capital, M&A capital, just about everything to even the big MSOs down to the single state operators.
Right. And when did you start it and why?
Good question. Well, 4 years ago, I sold my $5 billion asset manager to Oaktree, became a family office, and really just enjoyed investing myself in the product. And what I saw is this fast growth industry. So after I had put $60, $70 million of my own money to work, I took on 22 family offices and then realized that I needed to really broaden the outreach and lending, because really the financing source to that day was sale-leasebacks.
Right.
And the companies really didn't have that alternative lending solution. And so I said, okay, we can do this, right? We can make an institutional lender with the right cost of capital, with the right partnership approach to satisfy the industry. And it was really well received, and we are the first listed lender, currently the only listed lender on the NASDAQ, and JMP did a great job taking us public with Seaport, and on our last offering, I think we had Jefferies and Cowen join them. So it's Wall Street starting to recognize how important the industry is.
Yeah, that's cool. And I want to dig down a little bit about the reason why the industry needs lenders like you, just in case people don't know, or just to kind of get in the weeds a little bit.
Well, it's certainly in the weeds.
Yeah,
so look, it's all about growth. And it's all about growth capital. How do you take a market where you win a terrific license, especially in the limited license states? So we currently don't operate in California, Oregon, Washington. We really focus on the limited license states where the supply and demand equation makes sense. And you get a great Pennsylvania license, or you get an Ohio growth C1 license, and then, okay, you have to add some equity capital. You have to build something that makes sense and that's going to be efficient. We help them do that. And then you develop your brand and sell it vertically. That's one way to do it. Or this could be a growth company that's already really doing well in Ohio that wants to go into Pennsylvania or Maryland, Florida, Georgia, Arizona. So there's a lot of different things that we can do to help companies grow.
Yeah, and to dig a little further, why can't they just go to a bank and get a loan?
Well, actually, there are some banks that do lend. And we've encountered them.
Yeah.
Banks are pretty clunky so far in their lending. They have high amortization. They may look like they have a better cost of capital, but between the fees and the covenants and the way they interact, it's getting better, which is the good news, and good news for the industry. Look, I've been an alternative lender, which means alternative basically to banks,
right,
for 20 years. And there are plenty of banks that lend to regular middle market companies. But there's Oaktree and Apollo and others that exist because the need for alternative lenders is even in just normal middle market companies.
Right.
And so look, AFCG is a mortgage REIT. We have some other vehicles as well, and we just are able to plug that hole where the banks are not filling.
That's cool. And what parts of the industry do you specialize in?
So we're really soup to nuts. So we're doing everything from construction financing. We have in-house construction management that would interface with the customer. We do term loans. We'll work with the biggest multi-state operators as well on their debt financing needs. We look at things, though, from lending to companies secured by cash flows, licenses, and real estate. So we don't look at it as, say, at least we don't own real estate, we don't own equity in AFCG. We look at securing the company with first liens. And by being that, we're the company's partner. So a lot of our growth is actually going to happen from existing companies like Justice Grown, who took our loan in New Jersey, and I think we're one of the only lenders that are certified in New Jersey. That was not an easy process, like we talked about in the green room. And then we just expanded and announced that we expanded in Pennsylvania. And so we want to help that customer grow now in 2 very important key states versus 1.
That's cool. And how do you decide whether or not to loan a company money? Like, what are the metrics you look at?
So it's certainly what debt to EBITDA ultimately is going to be.
Yeah.
Even if there's not necessarily the cash flow year 1, do we believe the business model? Do we believe in the management teams that they have experience doing and executing on what they're saying they're going to do? Do we think the building that they want to build or the set of dispensaries in certain locations makes sense? And can it be built for what they say it can be built?
Right, yeah.
Remember, this is cannabis. Sometimes people are not quite sure what pricing is.
Yeah.
And construction pricing's nutty now because of the very long lead times. So you really have to underwrite so much. We have 24 people underwriting. I have 2 partners, Robin and John. And John has done $2 billion of real estate lending. He's actually building here in Manhattan a $500 million building. So he's very strong on the real estate side, as strong as I am on the cash flow side. And Robin's excellent on the origination side. She was a CIT banker. So we have a partnership that really functions very well.
That's cool. And I know you went into it a little bit, but where do you guys get your capital from?
So right now, we have a great source of capital, which are the public markets.
Yeah.
So AFCG is our stock, our market cap. We're still relatively small. I ran $5 billion of assets, and right now we're 300-something million market cap.
Yeah.
So it's still relatively small, but it's the largest. You also have other pockets of capital, whether it's the family office and equity fund or a private business development company that supplement the type of borrower that we need to make sure that the borrower can get what they need and the type of capital that they need.
Cool. And what got you into the space? Like, what attracted you to the cannabis industry at first?
It's a huge arbitrage because it was not enough data. Every company was different. You need to know state-by-state dynamics and laws, legislative environment, supply and demand. And all of that is very complicated.
Yeah.
And the more complicated things are, the better opportunity is to make returns.
Right.
So I first went to my CEO friends, like the CEO of BlackRock, Tannenbaum, who I had worked with, Howard, and I said, Howard, what do you think? He says, this is amazing, Len. I can't do it. BlackRock can't do it, but I think this is incredible. I asked, my friend at Apollo, I said, are you doing it? He says, well, Apollo's not ready to do this either because the bigger institutions aren't ready for that 0.01% chance that something goes wrong.
Right, yeah.
Meanwhile, the legislative environment's moved so positively,
Yeah.
more and more capital is coming into space.
Yeah.
And I think the bigger institutions are getting very comfortable.
Yeah. Yeah, and that kind of brings me to something I wanted to ask you. You have an interesting perspective on federal legalization, whether it'll happen and how it might happen. So I just wanted to see if you could share your perspective.
Let's think about it logically. First of all, SAFE Act should pass. It's ridiculous that it hasn't passed. It is ridiculous that the Democrats won't bring it up in a positive manner as their first solution without strings attached, because the industry desperately needs it to pass.
Yeah.
To have armored truck pickups that are limited to 1 or 2 armored truck companies in a state, to have limited amount of banks to take deposits and charging to put deposits in the banks is ridiculous.
Yeah.
And so it's not healthy for the country, it's not healthy for the companies. So we should get SAFE Act to pass.
Yeah, and just to break it down quickly, in case people aren't following the SAFE Act, what is it what will the SAFE Act do if passed?
Well, nobody knows exactly.
Yeah, right, of course. It only passed the House. So,
that's right,
yeah.
but SAFE Banking Act, which has passed the House, I think 8 times.
Yeah.
But yet hasn't,
5, but yeah.
4 or 5,
Yeah.
but it hasn't come out of Senate
Right.
subcommittees yet.
Yeah.
It may allow, because it consistently changes, banks to take deposits.
Yeah.
Maybe Visa and MasterCard to be able to use. Visa and MasterCard are not used to purchase cannabis.
Right.
Cannabis sales, I believe, will go up 15% simply by the use of Visa and MasterCard.
Yeah.
So great for the industry.
Right.
You maybe will get paid for your deposits instead of having to pay.
Right. Yeah.
It does a lot of really good things. At the same time, it may bring more banks into the system.
Yeah.
Which I think is fine because they're all subject to anti-money laundering and know your customer procedures. Just to put this in perspective, if you think Wells Fargo and Bank of America are coming in here, there's no chance, not for a long time. They're not even in CBD.
Right. Yeah.
Because they're afraid of this KYC.
Right. Okay. I was going to ask, are they afraid of a federal crackdown or more?
They're afraid that one loan somewhere, they didn't do the right anti-money laundering and they loaned somehow to the wrong person.
Yeah.
And that topples their massive institution.
Yeah.
Because you really have, we pay a lot of attention to anti-money laundering and know your customer. We do background checks of over 20% owners. Very expensive, detailed background checks.
Imagine.
So now, back to your question. How about legalization? What does legalization look like? People think legalization is on the horizon. It's not the way people think. People think the Schumer bill is going to pass. I don't believe it's going to pass the next 3 to 5 years.
Yeah.
What legalization may look like is states' rights, or something what was called the States Act, which is allowing every state the right to operate within its own borders, tax, monitor, test. Now, why do I think that's going to happen? Because New York, in one of the articles, maybe it was Forbes, I think it was Wall Street Journal or New York Times, was just bragging about the $400 million of tax revenue they're going to make.
Yeah.
Well, guess what? Schumer's on the wrong side of the bill. New York's not making any of that tax revenue if there's legalization.
And why?
Because California will produce 80% of the marijuana in the country, because California has the best environment to produce, the biggest producers, the most know-how, and Philip Morris will just open up, 4 million square foot factory there and produce.
Yeah, so meaning federal legalization, the way people are thinking about it, allowing interstate commerce is probably not going to happen in your view. And if it does, it's going to just be good for one state, which is California.
So I think if I were the senators from California, Republicans or Democrats from Congress, I'd be voting for legalization if I lived in California. I think for any other state to do that is not that state's best interest.
Yeah, that's an interesting point. And what about the SAFE Act? Like, if it passes, is it good for you guys? Or is it bad or, neutral?
Well, it changes things.
Yeah.
I wouldn't say, the bigger that we are, the more scaled, the more efficient, the better my cost of capital.
Yeah.
And I think, it's public that we are in the market with a debt raise now, and that's part of a cost of capital and it's equity cost of capital and debt cost of capital. If SAFE Act passes, yields will compress. They're already compressing at the multi-state operators, right? A year ago, or a year and a half ago, I think I loaned to Curaleaf at 3 points up front, 13% coupon. Today, Curaleaf probably borrows at 9 something.
Right, wow.
All in. And so you're seeing massive yield compression, even over the past 18 months, in the top multi-state operators, because they're diversified, they have a diversified revenue stream, they've actually turned cash flow positive, many of them, and they've proven out themselves, and they have good market caps. And so investors have recognized that. It's still the middle market and the lower middle market that are all over the place, depending on the risk profile. And we really enjoy lending to them. But in order for me to lend to them at really what's all in 10 to 12% rates, because don't believe the headlines. When Trulieve borrows at 8%, they borrowed at 8%, but they paid someone a 3% fee probably to raise it. So for us, as a primary lender, we could capture that 3% fee, and so it's 8%, but it's 3 points up front.
Right.
So it's probably 10-ish% money, or 9.5 to 10. If I could borrow at 5 and lend at 10 and capture 500 basis points for my investors, that's still pretty good.
Yeah, of course. Right now, is the industry in a growth phase or a consolidation phase or somewhere in between? Like, how would you break it down?
The M&A cycle is so exciting. It just is. But I've just seen, look, we have a lot of borrowers. We've looked at many billions of dollars of deals across the United States, primarily in the limited license states, and such a rapid pace of mergers. I mean, we had Bluma Wellness, which we backed, that got bought by Cresco.
Right.
I really missed that one. It was about an hour from my house.
In Florida.
Yeah, in Florida. Yeah, yeah. Brady did a
Brady Cobb. Right.
Brady Cobb did a great job running that. And so, look, and you have all the big guys now in Florida, whether it's Cresco, Verano, or buying Liberty Health, and all the consolidation going on there. Talk about M&A.
Yeah.
I think Cresco announced another one today. Pennsylvania has most of the big MSOs in there now, right? Growing and competing with real capital sources. So the deep, really great markets have already their dancing partners. So I say to some of my clients who are the 2, 3, 4 state operators or even single states, hey guys, you have to find a dancing partner because the big win.
Right.
And if you don't have a dancing partner at the end of the day, remember, this is going to consolidate.
Yeah.
15 MSOs will dominate this industry.
Wow.
And so we're now seeing the very small guys have issues as some of the cannabis prices drop in certain markets. And maybe they're inefficient or didn't understand the construction build. So even at the very tiny part, you're seeing a lot of mergers and acquisitions.
Yeah.
So this industry is quickly consolidating in what I believe is about a 2-year M&A cycle.
Oh, wow. Yeah, it's really fascinating how fast-paced it is. I was talking to Boris Jordan of Curaleaf a while back, and his vision is like what he sees down the line is probably like 3 to 5 big companies dominating the space, which is a...
And I agree with you unless States Act passes. And
Right.
because there are states like Ohio that'll limit your grow and limit the amount of dispensaries, or Maryland. So some of the states are being smart, not allowing the MSOs to dominate and allowing the smaller growers, which are really important to the market, and give a good differentiated product to exist. And so I hope more and more states do the limited licenses and don't just allow 3 dominant players, and really allow a lot of different alternatives for the consumer.
Right. And, speaking of Florida and other states with great growth potential, what do you think is the next state to pass adult use?
The next state, it's rumored Missouri's up there very
Missouri,
close,
okay.
right?
Yeah.
Ohio's thinking about it for sure. We're really excited about Georgia. I think Georgia just issued their 6 licenses. I think that's going to be amazing, an amazing state, an amazing growth of the industry.
Yeah.
We're a little bit leery of New York. You never know with their taxes and all the other crazy stuff going on.
Right.
How New York's going to turn out. But New Jersey looks great.
Yeah. Yeah, it's interesting about New York. Obviously it's too early to tell how it'll shake out, but are taxes your main concern, or there's only 10 licenses? Like, what are you thinking is the biggest hurdle to like explosive growth for the state's industry?
Well, it seems like New York's going to be unlimited licenses. If you go unlimited licenses, then everybody tries, a lot of people fail. There's a lot of different variety. New York's testing hasn't really been set up, or the testing regime hasn't been set up, right? The testing bottlenecks are very bad in some states. There's a lot of work to do.
Yeah.
And so you have a lot of companies that are very looking forward to it. And then I heard today at Benzinga, actually a really interesting thing. I heard of dispensaries opening in New York that are circumventing the law, but approved by New York City, that are charging membership fees and giving away the cannabis and not selling it.
Wow.
What a smart model.
Yeah.
And I literally heard about it today at the conference, and I said, okay, here's a problem. If New York's allowing that stuff to happen, then who's going to buy a license and pay for these expensive licenses and go through the normal process? I mean, I can't prove it, but it is rumored that New York has the biggest black market sales in the country.
Yeah. Yeah, I've heard similar estimates. So last question before we take some from the audience, but how should investors evaluate stocks? Like if they want to buy a cannabis stock, like how do you evaluate a company, and how should other people do so?
Well, the good thing about ours, which is not the one I'm going to talk about, but the good thing about Advanced Flower Capital, or AFCG, is, look, it's easy. It's our yield, and our prospective yield is usually how people think about dividend stocks like ours, right? Or BDCs when the BDCs hit. When you think about the operators that are in Canada, I think you have to be very careful. And you want to look at implicit leverage, which is sale-leaseback leverage that's not on the books, because that stuff is creeping up. When you start to 12% leases at 3% escalators, in a few years you're paying 15, 16, 17, and it only going north. So they're not going to be able to take advantage of safe acting yield compression like the ones like Verano, who really own a lot of their real estate and haven't done the sale leasebacks. So you have to couple the cannabis stocks in different buckets depending on how they financed their growth. And by the way, I'm not blaming them. That there was no other financing source for many of them than sale leasebacks. The other thing you really have to be careful is minority eliminations. So a lot of the cannabis companies are not fully owned by the companies, but they may consolidate the EBITDA. I know this is getting complicated on the high end. And so the EBITDA may not really be EBITDA, and don't think EBITDA is cash flow. So you really have to be very careful to get to net free cash flow. And here you really want to stare at, are these companies really cash flow positive? And is that cash flow growing? And how diversified is that cash flow? And make sure it's not one-time stuff. Because there's so much M&A activity, less trick of the trade. Yeah. And remember, I was 17 years in the middle market, lending over $1 billion a year with 100 different people before I sold the company. So we're very used to these metrics. And one of the covenants I set up was net free cash flow because I never believed any of these numbers. So I set up my own covenant right at the bottom, and everybody's like, what is this thing? And I said, well, I just want to show you that you're not even above zero.
Yeah.
And so you really have to do a lot of analysis. And so, I really encourage investors. There are great companies. There are great growth companies. And there are great growth companies like Curaleaf that's done sale-leasebacks the right way. So just because sale-leaseback doesn't mean it's bad, just please read through everything.
Yeah, that's good advice. And anybody in the audience, do you have a question for Len?
So I think Gerald's question is that you've seen the compression among the MSOs and you've seen headline rates. And just remember, headline rates include fees, OID, and other things too, so don't always believe the headline coupon. However, they certainly have compressed a lot, and Trulieve just set the new headline record with an 8% deal done by Canaccord. So the question is, and by the way, that same debt, just so everybody knows, is trading at about 102 or 102.5. So not only did they do a really good headline rate, the debt traded far better than I would have expected. And so I'm wrong. I guessed it trading flat, and I'm wrong. It's actually trading up. Which means there's probably going to be further compression. So you really could see it from the trading prices. And I think Seaport and Canaccord actively trade these issues. And so if you're curious how anything is going to go, and if you could see that by your Curaleaf debt, if you want to buy that today, or TerraSend debt, which I think is trading at 106.5 bid, 109, you know that their next issuance is going to be towards that trading level, and they're actually trading in volume. So it's a really healthy thing for the industry, to have trading, because it's really, the price discovery is really coming out. And if you think about why, and back to Gerald's point, how is that? It's because the hedge funds have gotten comfortable that if Canaccord or Seaport or others, I'm sure Cowen will get in this industry too, start issuing these things, they're covered. That they've done their work and they feel safe on that investment, and that's what's pressing down those yields.
I could listen to this all day, but unfortunately we're out of time. Thank you, Gerald. What a great question. And Len, Will, you guys were wonderful. What a great discussion. Thank you both for being here.
Thank you.